We are kicking off today's breakdown with the dominant market theme of this Monday session, a sharp divergence inside the technology complex that is keeping traders on edge. Nasdaq 100 futures posted an intraday rebound led by semiconductor names, yet the broader the Nasdaq 100 ETF remains down 1.73% as of this morning, with the Nasdaq 100 index sitting near 28,504. That gap between chip strength and overall tech weakness tells you this is not a clean risk-on move. The S&P 500 at 7,448 is only off 0.13%, while the Dow Jones is actually up, painting a picture of sector rotation rather than broad market conviction. The VIX has ticked up to 16.33, a signal that caution is quietly building beneath the surface. Here is the core headline fact. Semiconductor equities staged a visible intraday recovery, pulling futures higher, but that strength failed to lift the entire Nasdaq complex out of the red. The Nasdaq 100 is still down 1.73% on the session, anchoring the Nasdaq 100 near 28,504. The key names driving the chip rebound include NVDA, AMD, Broadcom, and MRVL Technology, all closely tied to artificial intelligence infrastructure, spending cycles, and hyperscaler capital expenditure commitments. Meanwhile, the broader the S&P 500 is barely negative at 0.13%, confirming that the weakness is concentrated in high multiple growth rather than spread evenly across the market. Gold futures are up 1.25%, and precious metals are surging broadly, both classic signals of investors hedging risk rather than fully embracing the chip relief trade. The real driver here is not just a single day's price action. It is the collision between two powerful macro forces that semiconductor stocks are caught between. On one side, the artificial intelligence capital expenditure supercycle remains the most powerful demand tailwind chips have ever seen, with hyperscalers committing enormous budgets to GPU clusters and custom silicon. On the other side, the 10-year Treasury yield has moved up to 4.49% today, a meaningful headwind for high-duration growth assets because it raises the discount rate applied to future earnings. When yields rise, the present value of long-dated tech cash flows compresses, and chip stocks, which trade on multiples anchored to years of future artificial intelligence revenue, feel that compression acutely. The rebound you are seeing today is the market testing whether artificial intelligence demand conviction can overcome yield pressure, and the answer, so far, is incomplete. Let us name exactly who is in the crossfire. On the semiconductor side, NVIDIA, AMD, Broadcom, and MRVL Technology are all participating in the intraday bounce, making them the primary beneficiaries if this relief trade has legs. The Nasdaq 100 is the instrument most directly expressing the tension, down 1.73% even as chip names recover, meaning megacap software and consumer internet names are dragging the index lower. The Dow ETF reflects financials and industrials absorbing rotation out of growth, a classic defensive pivot. The Russell 2000 is down modestly, suggesting small-cap cyclicals are not participating in any rebound narrative either. On the safe haven side, gold is absorbing bids, and Bitcoin is declining, consistent with a broader de-risking impulse running parallel to the chip bounce. There are three specific levels every trader needs to monitor from here. First, the 10-year Treasury yield at 4.49% is the single most important variable. If it continues climbing, the math on chip valuations gets harder regardless of how strong artificial intelligence demand is. Second, Nasdaq 100 at 28,504 is currently the battleground level. A sustained close above here would validate the chip rebound as real, while a breakdown below would confirm that the intraday bounce was purely tactical short covering. Third, the VIX at 16.33 is still in a relatively low volatility regime, but its uptick today is worth watching. A break meaningfully higher would signal that institutional hedging is accelerating and could pull the Nasdaq 100 lower faster than the chip names can compensate. Watch those three in sequence as the session develops. The bottom line is clear and actionable. Today's semiconductor rebound in NVIDIA, AMD, Broadcom, and MRVL Technology is a tactical relief trade within a risk-off session, not the start of a new leg higher in the Nasdaq. The persistent 1.73% drag on the Nasdaq 100, the rising 10-year yield at 4.49%, and the safe haven bid in gold all argue against reading too much into intraday chip strength. Use any further strength in semiconductor leaders to rebalance toward names with confirmed near-term artificial intelligence infrastructure demand visibility, and keep the 10-year yield as your true North Star for whether growth can sustain a recovery. That is the one story that mattered in today's session. Full breakdown is complete, and we will keep tracking these levels as the week unfolds. If this kind of deep dive market analysis is useful to you, hit subscribe right now and tap the notification bell so you never miss a daily breakdown. We cover the stories that actually move your portfolio, specific tickers, real levels, and the macro context that ties it all together. See you tomorrow.